All right, hey everyone. We are back for this first private QA session of the week of June 21st. And today is Tuesday. The market has just crashed. The Bitcoin market has just crashed under 30,000. And we're going to begin this Q&A session, which will be published in about 4 days publicly. Okay, today is Tuesday, June 22. All right, let's do it. I'm going to read some questions. Maybe there'll be some that don't require a chart, and I will answer those. We got a bunch of questions coming up. Let's read some of them. I was late to the live stream. Are you looking for the daily MRI buy signal as a good buy the dip? Yes, I am. We will pull up the chart, and I will show you that, of course, but also check out the public stream. Judging from the chart pattern, how likely is it that we will V reverse right from where we are, in your opinion? I believe there will be a V-shaped recovery. I really do. I don't believe that we're going to get a prolonged ability to accumulate. I do think this is going to be closer looking to a V-shape than not. Let me go to screen share and show you. So this is the weekly chart. I believe that the bottom would be more similar to what happened in March of 2020 than what happened in December, January of 2019. I believe it'll look more like this than like this. If we go back to the 2013 situation, you can see that here there was the initial crash that took us down 80%, but then there was a bit of a recovery, and then there was a second crash. But to me, the second one wasn't really a crash. Now, even though the secondary low did not go lower than this first low, this was still more of a V shape than not, because right here, you can see how we dropped 34% in a single week. But then we also recovered 58% in a single week. That to me is a V shape, okay? That's another V shape. So something like this can certainly happen. Or see, this is more of a prolonged version, right? Even though, and you can see how after we went up, we never went lower than that. So right here, if you did not catch the bottom, the next reasonable opportunity you had was already 40% higher. That's not what happened here. Here, if you did not catch the bottom, you had like a 6-week opportunity to buy at 25% higher. 25% higher isn't great, but it's 25 is better than 40. Here, I'm just going to delete these as I go. This was the 2015 bottoms, basically. And you can see how you had a whole year to buy it near the lows within 20-30% of the low, other than this one day. So this at the end is also a V-shaped recovery. You can see it right here. So this was that second crash. So if you ended up buying with leverage here somewhere thinking we're corrected, and then we did not, you can see how the best chance you had to buy was about 45% higher. So this on a short-term scale was also a V-shape. So I am looking for something like this. So now we go back to today on a daily scale. And this is what I kind of drew as potential. I think this is a little bit lower than what it can actually go down to. But remember, most of this is the wick. You're not going to get a close down here. The close could be up there. But the idea is that wherever the low is, your reasonable chance to buy is going to be over 25% higher. Okay? So in fact, like I think this is a little too low, and these two are probably both a little too low. So, I can like maybe do that. Something like that. We'll see how it goes. And this is the MRI bottom candle. So I am looking for a drop into the MRI low. Is not Peter Brand head and shoulders on the weekly not worrying you? It's not. I think this left shoulder is a little too flimsy of a shoulder. And I think this head is a little too spread out. Just my opinion. Peter Brand has a lot more experience than me. And I don't like the fact that we're breaking this low. So by percentage terms, let's say this was a head and shoulders. So this would be the neck. So that would be the neck that we're breaking now. And by percentage, we were up 92%, 87%. This was also like $30,000. So what does that mean? We're going to zero? Like, it doesn't. It doesn't really worry me. I'm actually not worried at all. I'm ready to buy the dip. If I was leveraged long, I'd be worried. But if you're not leveraged long, I'm not worried. I don't think this is going to last long. Just, I don't know, take a 2-month nap or something. It'll be fun. Do you expect more downside through this week? Yes, I do. I do. It's possible this is the bottom because if you flip the Wyckoff pattern upside down, so Hugo posted charts like this, and like, I'm not a fan of these. It's got too many moving parts, way too many moving parts. If you have to count to 28 in order to get a pattern in, that's too much. That's like, I'm sorry, guys, it's too much. I do not like these patterns. Yes, that's a head and shoulders, and that's a flag pattern, and that's a trap, and I don't know. Well, yeah, that's the same thing, but how does it compare to, like, this is the same problem I have with Wyckoff, you know? Yes, it looks like that. What time frame is this? Oh, it's on gold. Okay. But it's just too many moving parts. I don't like patterns with too many moving parts. There's too much of the variance, and then then like another 2 weeks go by and you can still adjust the pattern into it. I like my triangles as far as I go. So the same thing with Wyckoff, you know? Wyckoff. Can't even spell it right? You just got too many moving parts, and people are flipping it upside down this way, and you're like, oh, we're in the middle of a Wyckoff again, but now it's in the opposite direction, where what happened today is this little thing here, like the ultimate low right there. And I'm like, okay, maybe, but I have no idea. So this is why I don't like these patterns. Like, this could be like I've seen people like draw it, like the upside down, like the bullish version of the Wyckoff. But it's got too many moving parts for me. Yeah, here it is. Here's the picture. I'll show you. Somebody, I have no idea who posted it. Right. So we just hit this area here. So it looks perfect, right? Like this person called it right. They posted this probably, I don't know, like a day or two ago on the 8-hour chart. But if we keep going down, then it's not this anymore. And it's just, like I said, it's got too many moving parts for my liking. But it looks great so far. I prefer being bearish at the break of these lows. Like we just broke this area, maybe this. So we're literally here, right at what we're literally right at this peak. So if we don't reverse right now, then this needs to be redrawn. But my MRI tells me that we got some more downside here. So we'll see. But so far, this looks perfect. But I don't generally like these patterns because they have too many moving parts. But so far, it's perfect. I like my hourly MRI buy reversal. That person was using the 8-hour chart. And it looks great. I'm using a 4-hour chart, same thing. I can make it 8. Yeah, it looks perfect so far if it bounces right here and goes to new all-time high, which it can do. It can certainly do it. And it can still give us an MRI daily buy as long as we get a candle close lower than yesterday's close at some point here. So it can totally happen. But like I said, I don't generally like those patterns. If we were to go up significantly right from where we are now, when would you turn bullish? That's a great question. I would turn bullish at the break of the consolidated swing high. So I turn, well, I'm not going to say I turned bearish. I turned bearish earlier. I turned bearish pretty much. The break of these lows were bad, and the break of this moving average was bad. So when would I turn bullish? I would turn bullish at the break of the prior consolidated swing high, best fit line, pending this little thing here. So at the moment, I would turn bullish at 39. But if we capitulate down to below 25K, I would then turn bullish like at 27K. Like that line drops significantly from there, at that point. Good question. Don't you think it's better to allocate cash into alts for better gains, or is Bitcoin best option for that? It depends on your risk tolerance. I prefer Bitcoin. I always prefer Bitcoin. To me, alts are penny stocks. I mean, if you want to gamble with penny stocks when the market crashes, I mean, here's the question you want to answer yourself, right? Back in the crash, let's go to the stock market. Weekly stock market. Right here at the crash, at COVID, do you want to buy into stable companies like Amazon and Netflix and Tesla? Or do you want to buy into penny stocks of companies who may not survive? It's your choice, right? Obviously, the penny stocks can go up more. Do you want to buy into Netflix or a Netflix competitor? I prefer Netflix, especially when people can't leave their house due to lockdowns. Depends on your risk tolerance. Next, what are your thoughts on the Ford daily and monthly chart? I don't know. Let's go look at the chart, and then I'll know. Ford, ticker's F. I actually knew that. Well, extension C is a useful extension that ends. You can also see a beautiful MRI sell right here at $13. Ford's doing fairly well. I guess if these car manufacturers stop paying Tesla all that money for carbon credits, they'll be better. I think that it can correct to the prior swing high. And this chart looks bullish to me. I don't have any moving averages up, but it looks bullish to me. And if Ford can break this 9-year, Jesus. I mean, you take a best fit line and you draw it. The break of $17.50 could be absolutely huge for Ford. But you want it to happen with some consolidation. You don't want it to happen in 2021. You want it to happen in 2022. That could be a huge breakout. Look at that beautiful MRI top. Oh, daily chart. This was the weekly chart. So awesome if that's an MRI top. Oh, it's not. Missed it by a few candles. Oh, yeah, this looks great. I like this. What a beautiful bounce. Look at that reversal candle. Look at that beautiful MRI buy. I would be bullish now. Sucks to buy it now because it gapped up and it didn't close the gap. But buying it yesterday would have been awesome. If you saw it yesterday in the MRI and you have confidence in the MRI, that was a buy. Beautiful buy. Because you know where your stop loss is. Your stop loss is below the swing low. So if you bought at any point yesterday, any point, hopefully not the very tip, but the worst time, like buying this thing on the MRI should have been anywhere no later than the break of Friday's high. So that's, which is the closing of the price. So if I had bought this at any point during that candle, I would already consider a break-even stop. I would already consider a break-even stop. Even though a break-even stop just closes the gap. So maybe it depends. Hopefully you didn't buy it right up there. Hopefully you bought it somewhere in the middle of the candle. And then you can set a break-even stop in the middle of that candle and you're good. And if we break today's high later this week, I'd set that stop loss, I don't know, basically the bottom of this candle, and now it's a profitable trade no matter what. Beautiful MRI buy. Right off the reversal candle. What's a healthy Bitcoin to shitcoin ratio in your opinion? Well, that's the thing. There isn't one because shitcoins should not be used as long-term investments. So Bitcoins should be used for only trading opportunities. And if they're trading opportunities, then the concept of Bitcoin to shitcoin ratio does not apply. The concept of a balanced portfolio of, say, I don't know, 70% Bitcoin, 20% stocks, 5% precious metals, and maybe 5% something else, that something else should not be a short-term thing. Like, it shouldn't be something that you are trading. That's an investment portfolio. That's independent of your casino gains, right? Like here's how I treat it. That last 5% is poker and slot machine money. Like, it doesn't make sense, right? Like, if you have a portfolio that's comprised of Bitcoin, S&P 500, some bonds, some precious metals, like, shitcoins shouldn't be in that portfolio. Shitcoins is casino money. Shitcoins is, I've read 100 books on poker and I'm going to go start playing to make extra money. That's a different bucket. That's a different bucket. That's your gambling bucket. That's your trading bucket. This is your, I'm going to have 50% in Bitcoin and 50% of my money, I'm going to actively trade, gamble, manage, whatever. That's your shitcoin bucket. It should not be involved in a Bitcoin to shitcoin ratio. There's nothing wrong with trading shitcoins, but it doesn't compute to be in a balanced portfolio. How much weight, if any, do you put on the chain analytics versus technical chart analysis? On-chain seems to be good for long term, but maybe not short or medium. Well, that's what it feels like right now. Right now, it feels like on-chain analysis that Willy Woo does. It doesn't seem to be very good in the short term, but there are many charts that Willy Woo has where on-chain analysis looks amazing in the short to intermediate term based on individual spikes. But I gotta say, it's really tough to be Willy Woo right now, or Plan B, because, and I know it personally, right? Because like mostly Willy Woo, but less so Plan B, but still influenced by Plan B. I had to like raise my year-end targets a little bit based on their analysis, and I don't know if they'll get hit. Like I'm still pretty optimistic, 100K by end of year, but could be 70K by end of year. It's possible we're still in a bear market by end of year, but I doubt it. I think Willy Woo's analysis is great. I read his newsletter within minutes of getting the email. If I see within minutes of seeing the email. Let me rephrase that. Like Willy Woo's email comes in on his newsletter, and whatever I'm doing, I pause and I read the newsletter. Are your World of Rusty backgrounds something you commissioned or something Rusty made because it's cool? Well, it's a combination, but like they're not free. It's something I commissioned. It's also, well, like he has free reign to come up with ideas for me, and they're almost always good. So it's a combination of both. I give him the cities to put in the background. Looking at your bar projection, how likely is it that we will retest the bottom of the breakdown line? Yeah, that's probably this right here, right? So we drop hard. This will keep coming down. It'll reject it, and then maybe level off a little bit, and then reject it again, and then eventually break it. So I'm projecting that the moving average is going to go kind of like this, and then kind of like this, and then eventually break. Is the 10 a.m. reversal Eastern or Central? Eastern. Eastern. Let's see. Let's go to the S&P. Let's see if we got a little bit of a 10 a.m. reversal today. Daily S&P. Let's go to the 10-minute chart. 10 a.m. Oh my God, look at that. This was not pre-planned at all. Holy shit. Look at the S&P this morning. 10 a.m. candle, boom, marks the low. How high did we go? 15 points. Back in the day when I was trading the S&P futures, trading the 10 a.m. reversals on the S&P futures, my goal, I used to pray for a 10-point move. A 10-point move would make me $1,000 because I used to trade 2, sometimes 4. So a 10-point move on 2 S&P futures is $1,000 because they're highly leveraged. So this is a 15-point move in 40 minutes, 50 minutes, 1 hour, and it's still rising too. Awesome. Haven't talked about this in a while. See, this MRI buy doesn't matter because it happened like right at the open. Oh wait, it kind of matters because the futures market, but it doesn't matter because like happening at the open, like I ignored these MRI buys. Also on the cash market, like there was a big gap all throughout the night. So I would ignore this, but beautiful 10 a.m. reversal. Can we go down to 5 minutes? Doesn't work every day. Look at that, 10 a.m. Boom, reversal candle. But you're not going to buy it here, right? So realistically, my trade is somewhere near the top of this candle, and I'm probably looking to exit now. So that's 11.5 points. You also don't have to exit with the whole thing. You know, this is why when you trade like 4 futures, you can exit 2 and then 1 more and then hold the rest one into end of day. Just make sure you get out. Otherwise, that 1 future can lose you everything. What are the variables, the 2 lines measuring the Arun indicator? And when they cross, what is minimum value that you're looking for? Sure. So if you want to learn more about the Arun, I strongly recommend going to learn trading, going down to oscillators, finding the Arun, and you have 1, 2, 3, 4 links, 5 links right there that educate you on the Arun indicator. It's actually one of the more recent indicators that was created and is popular. It was only created in the 90s. It's probably the newest indicator on this entire list. Well, I think even Tyler Jenks had Hyperwave before the 90s, though it wasn't public until recently when the book came out, and a few of the others. I mean, we'll see. Like, if I was more motivated, I would, you know, make the MRI globally known, but maybe one day. So maybe one day I'll write a book. So let's get back to the Arun. So the Arun is a very simple indicator, very simple. Actually, let me just open it up. Okay, it's very, very simple. Like, here's the math. 25 days, the number 25 minus days since 25-day high divided by 25. And then you normalize it with 100, right? It's just literally looks for the breaks of a 25-day high and the breaks of a 25-day low. So you can do the math by hand. It's very, very simple math. It just uses the break, okay? So here, 25-day Arun, up or down, right? So days since last high or low. So the number of days since the last swing high and the number of days since the last swing low. So that's all you're really measuring. So what you want is, what the Arun is actually doing is when both lines are dropping, that means price is consolidating between a recent swing high and a recent swing low. And right here, when the green line crosses above the red line, that's right here. So you see this candle here, this one here, breaks a 2-week swing high, okay? And it's been a very long time since we had a swing low, about half a week. So about a week, sorry. So that's why the red is here. So the perfect time to use the Arun, and right here, the Arun isn't very useful at all. What you want is a breakout after a prolonged consolidation between a high and the low. And that tends to lead to some very good moves. If we go back to the S&P, which is where I have the Arun open, okay, what you want is one line breaking above the other line where they're both as low as possible. That means that right here, when this occurred, I'm gonna pull this down. When this occurred right here on July, when this candle occurred, we've broken a high, a swing high. We almost broke that, but that was more than 25 days ago. See, this had fallen out of the 25-day span, unfortunately. But the break of a prior swing high, and we have not had a swing low in a while as well. So it's been right here. Here's a 25-day swing low, and we have not, and we're coming close to zero days, like basically more than 25 days since the swing low. So that's why the red line is all the way at the bottom. And it's taken us forever to break the 2-week swing high. And this candle breaks the 25-day swing high. It's been almost 25 days since the swing low. And that's why the cross is taking place near the zero line. And that tends to have you a lot of good upside. So that's what you're looking for. So same thing right here. See, we're breaking it. It's not perfect. Would have been better if it happened a little bit later. But here we're right at 20%, which is good. Anything under 25% is good. Then the Fed kind of screwed it up, but now we're back to that same area. Currently, Bitcoin is back above 30,000. Where do you think it might go before it turns back down? Not very far, actually. I'm not crazy bullish right now. You can look at the 1-hour chart, and the 1-hour chart is suggesting that we are in the middle of a 1 to 4 candle correction. Here's your MRI buy. So where can it go? I don't think it'll break this swing high. So here's your swing high, which is also the MRI resistance line, and it's also near the middle term moving average. So the more likely scenario is the prior swing low at 31,250, which is also going to be the moving average, maybe a smidge higher than that, because we're moving up nicely right now. So I don't really have all that much hope right now for how far this can go. But at the same time, this could also be the low for the summer. We don't know yet. All we know is if you were using the 1-hour chart and you saw the MRI buy, you can certainly buy it off the MRI buy with a stop loss below the swing low or below the candle lows. But you are only looking for a 1 to 4 candle correction, because even the 4-hour chart is still suggesting more downside. Though this candle looks very bullish, but this candle still has an hour to go, so who the hell knows? All right, we got a big crowd today in the private Q&A. Good questions all around. I'm liking this. All right, we've been going for about 30 minutes. It will be hard for me to do these the rest of the week because of Pork Fest, which is in the middle of nowhere in some campground in New Hampshire. But after that, I should be able to do these more often throughout the summer. I have been hedged my HODL position and looking to close at capitulation, i.e. short profit into Bitcoin low for more Bitcoin HODL. I think there's a high probability it could occur around the CME expiration Friday in confluence with the daily MRI buy. Yes. In your opinion, based on the candle structure price and how this week plays out, would that be a decent strategy? Yes. Is there a particular low that would not make you comfortable with the daily 9 being the bottom? Good question. Well, daily MRI not being the bottom. So any MRI buy lower than 29,000 will make me comfortable. The MRI buy that would not make me comfortable is this one. This, I was never comfortable. I was never comfortable with this weekly MRI buy. I did not like it at all. So if your MRI buy on a daily looks like this 3 days from now, somewhere in the middle of today's candle, that would make me uncomfortable. So if there was an MRI buy somewhere around $31,500 or $31,000, and that's the average of that candle, that MRI buy makes me uncomfortable. Great question. Isn't the volume still a bit low for a potential low on MRI buy signal? Maybe. I'm not a big volume guy. Volume could also change if there was a capitulation down to 25K on Friday or Thursday. All right, guys. Great questions today. Very great. Very good questions. Hope you guys are enjoying this private QA. The price will go up for next year on it. This was just a test run to see how things go. All right. Oh, I didn't even turn on anybody's mic privileges. It's okay. Forgot about that. All right, guys. I'm going to go ahead and call it a day. We're going to stop the screen share. Thank you all for joining this private Q&A for Tuesday, June 22nd. And we will release this publicly. And hopefully I open this up this weekend to anyone that wants to join, though it's not going to be free. All right. Bye, guys.